Good afternoon, everyone. I'm Eliseo Herrera. I'm the CFO here at San Jacinto College, and today we're going to analyze the financial position of San Jacinto College for fiscal year 2015 while you wait the financial report for the fiscal year 2016 to be completed. This presentation is an overview of the college's financial operations for the fiscal year ended August 31st, 2015. Most of the information contained within this report was extracted from the financial information reported in the fiscal year 2015 Comprehensive Annual Financial Report, CAFR. The CAFR is a more detailed and complete financial presentation prepared in conformance with Generally Accepted Accounting Practices, GAAP, and was audited by the college's independent auditors who issued an unmodified opinion. An unmodified opinion is given when the auditor can state that the financial statements are accurately and fairly presented in all material respects. The college's CAFR is available on the college's website at sanjac.edu/annual-financial-reports. The college's financial position in fiscal year 2015 continues to remain strong, with total assets and deferred outflows of $590 million, total liabilities and deferred inflows of $414 million, and total net position of $176 million, which includes the implementation of Governmental Accounting Standards Board Statement Number 68. The following is summarized from the college's CAFR from the year ending August 31st, 2015. To answer the fundamental question, how much money does the college spend each year? You can see that total expenses were $228.1 million for the fiscal year 2015. The total expenses included $17.4 million in depreciation, which is a non-cash transaction. When excluding depreciation, the total expenses are reduced to $210.7 million. Here are the expenses by category for 2015. Financial aid was number one with over about $60 million. Let's see, instructions number two with about $55 million. The third one was instructional support at about $35 million. And then there's the debt service, which was about $25 million. Here we look at the annual expenses comparison between year 2012 through 2015. As you can see, through 2012 through 2014, expenses increased just marginally each year, but 2015 it really increased a lot. So in total, there was about a $79.5 million increase in expenses between 2014 and 2015. The areas with the largest changes were the inclusion of $33.9 million in scholarships and the addition of interest to auxiliary expenses made that line increase by $13.2 million in 2015. Here we look at the 2015 revenue. One of the reasons for the increase in expenses for 2015 was the increase in revenue. Revenue came in at $223.9 million. Here we look at the 2015 revenue by category, with financial aid being the biggest revenue generator at about $60 million, followed by maintenance ad valorem taxes at about $55 million, followed just slightly behind that was tuition and fees, about $53.5 million. Here we have another annual revenue comparison from 2012 through 2015. You can see that 2012 through 2014 had moderate increases in revenue, and then 2015 jumped up a whole lot there. In total, there was about $73.7 million that increased in revenue between 2014 and 2015. Areas that decreased in 2015 from 2014 were tuition and fee revenue by $16 million. Areas that increased between 2015 and 14 were state appropriations by $7.3 million. Taxes collected was almost $30 million. Here we look at the investment in developing revenue sources. The first one is tuition and fees. The total investment was over $84 million for 2015. And out of that, 234,000 was for recruitment to increase enrollment. As far as retaining enrolled students, we had 11.8 million in unrestricted phases for student services, 12 million in auxiliary for student services as well, and 60 million restricted phases in grants for student services to retain enrolled students. Next, we have grants and contracts. The Professional Development Office, their budget was $42 million. Next, auxiliary sales and other. We invested $4.2 million. State taxes and federal revenue investment was $7.7 million under the general instructional expenses. General institutional expenses. The statement of net position is a point-in-time financial statement and presents a fiscal snapshot of all assets owned by the college, all liabilities owed by the college to others, the deferred outflows and inflows of resources, and the resulting net position. The focus is to report the total net resources available to financial future services. Assets and liabilities are presented in the order of their liquidity and non-current defined as greater than 1 year. Net positions are displayed in three components: net investment in capital assets, restricted and unrestricted. Increases or decreases to net position are one indicator of whether the overall financial condition has improved or deteriorated during that year when considered with other factors such as enrollment, contact hours of instruction, student retention, and other financial information. The statement of net position is useful in determining the assets available to continue operations, as well as how much the college owes to vendors, bondholders, and other entities at the end of the year. The following is prepared from the college's statement of net position and provides a summary of its assets, liabilities, and net position for the years ended August 31st. The fiscal position Sanjak ended fiscal year 2015 was decreased in a net position by $4.2 million, which includes $17.4 million in depreciation, which is a non-cash transaction. While we consider ways for Sanjak to enhance revenues from government aid, grants and contracts, philanthropy, auxiliary enterprises, and tuition and fees, the common theme is the current economic uncertainty at the federal and state levels. At Sanjak, the two main sources of federal funding are the Pell Grant and federal Veterans Educational Benefits. On Monday, February 6, 2017, the United States Senate will vote on the confirmation of Betsy DeVos for Secretary of Education. Mrs. DeVos has not said much about her plans regarding funding for higher education. What is known is that Mrs. DeVos had a role in the development of charter school systems in Detroit. There has been some reporting that the new president of the United States wants to eliminate 500,000 teaching jobs in public schools. So it is fair to anticipate a decrease in funding for higher education regardless of who becomes the Secretary of Education. This means Pell Grants will be reduced and federal veterans educational benefits may also be negatively affected. With respect to state funding, Sanjak and community colleges in Texas have experienced a decrease in allocations each biennium since the Great Recession was triggered in 2017. Governor Abbott currently has a hiring freeze on all state-funded agencies until the state legislature decides on the percentage of allocations they want returned to the state. Governor Abbott asserts that the Texas economy has slowed in conjunction with the oil and gas industry. In 2015, Sanjak received $9.6 million in grants and contracts, $34.2 million for scholarships from donors, $4.9 million for auxiliary enterprises, and collected $38.8 million in tuition and fees. Fortunately, the voters in Sanjak's taxing district passed the 2015 bond for $425 million to build, renovate, and repurpose facilities. Sanjak must maximize each bond dollar because of the state and federal economy. Since financial dilemmas are anticipated from the new United States president and due to the slow Texas economy, college leadership should aggressively expand our donor and partnership bases. Leadership should consider potential tuition increases and begin planning to reduce the cost of instruction, staff positions, and across-the-board budget reductions. Leadership should set money aside for budget contingencies during this period of economic uncertainty. Institutional priorities. Until we know what the new U.S. president's policy for higher education funding will be and the appropriations from the state of Texas legislature, SANJAC must proceed cautiously by prioritizing philanthropy and tuition and fees before government aid, grants and contracts, and auxiliary enterprises. The negative impact on funding may be short-term because the new president is deregulating industry and his Secretary of State nominee, ex-CEO of ExxonMobil, Rex Tillerson, has been confirmed by the U.S. Senate. The U.S. oil and gas industry will be picking up business. The resurgence of oil and gas will have a positive impact on the Texas economy, which should have a positive effect on SANJAC. Only after the economy improves should SANJAC reevaluate these priorities. Thank you very much for attending this presentation of San Jacinto College District financial positioning. Please let me know if you have any questions.